going on, guys? Another week, another episode. Energy News Beat podcast here by Sandstone. Stu hooked it up this week. We're rocking. If you're on video watching us, we got Sandstone Group polos, so we're looking fly. As always, follow us Facebook, Twitter, YouTube. All of our stories via the world's greatest energy news website, energynewsbeat.com. Again, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Bear Country, joined by the purveyor of the show, the executive producer of the show, all-around good guy, Stu Turley. How you doing today, my man?
Hey, it's a beautiful day in Bear Country. And, Michael, we had a fantastic weekend, and it's going to lead up to a great week. I actually had a meme called the infrastructure build, and I guarantee you, when you have Larry the Cable Guy, LOL, your tweet, I'm sorry, my life is now complete.
If you guys have to figure this out, me and Stu are doing a little work vacation. We have our other business partner sitting right here, but all weekend it's been Larry the Cable Guy, guys. This is what I have to live with. Larry the Cable Guy liked my tweet. That's what Twitter does, Stu. It connects celebrities with average folks. No, I do think it's funny, though. You've been killing it on Twitter. Follow us at Stuart Turley 16. I'll throw our Twitter handles down here below us. I'm in Tanner _1. But it's Larry the Cable Guy. What can you say? We have a great
funny
show for you guys lined up today. Stu and I are going to talk mining, which is probably one of the biggest energy questions that I think is still left unanswered out there. I was listening on CNBC this morning. They were talking about Tesla. Elon Musk today just vested $32 billion in Tesla stock due to revenue projections that was built into his payment plan. It's a nice little payday. 32 bills. So I think there's a really interesting mining discussion to be had. We also will cover some of the earnings of some of the big boys. I think there's an interesting trend. Obviously, oil prices have been up, so I don't think you're going to see anything too wild like we saw last year. But I think we'll cover that. And then obviously we'll have Stu look ahead internationally. I'll look ahead domestically and see what we've got coming. But where do we want to start, Stu? Do we want to do mining or earnings first?
Go ahead and do some earnings. I want to hear what was going on because you just pounded the earnings stories out, man. I want to hear a real quick one on that, man. You did good.
I mean, let's take an overview. We've really seen the majors go ahead and drop their stuff. What we're seeing is a couple things. First, oil prices are high, means revenues are high. Equinor, best quarterly results since 2014. We ran that. Shell raised their dividend for the second time in 6 months, beating after first quarter earnings. ExxonMobil chalks in at a $2.7 billion first quarter. Chevron wasn't quite what they expected because the problem is they're bigger in the refining space. The other thing I thought was very interesting, Liberty. So from a major, so let me back up for a second. From a major standpoint, they did very well. Oil prices being higher, as we see shale companies begin to roll out earnings this week and next week, it's going to become very, very clear. Higher oil prices meant higher earnings. We saw the M&A deal with Pioneer. That deal with Pioneer, and Double Eagle, that was a bet on higher oil prices. So if that M&A went through because it was a bet on higher oil prices, you can better believe that we're going to see pretty good earnings statements as we roll out. What I really thought was interesting was Liberty. Liberty came out. One, we love them over there. Stu, what's our phrase?
Good management, good numbers. They are good people all the way through. They got a great culture.
No, and we love them. They completed their deal with Schlumberger this quarter, $552 million in terms of revenue for the first quarter. That's a big deal, Stu. That's about 40% increase from what they were doing. They still operated at a $39 million loss, but what this tells me is this. And I'm just pulling up the earnings sheet because I want to go over what earnings we have coming up. But what it tells me, Stu, is this. There is an appetite to start drilling again. We've seen rigs increase week over week. Seeing Liberty now come out $500 million in a quarter. That's $3 billion a year in revenue. That's pretty good.
You're also seeing that because some of the other smaller players have gone out of business, which is very sad, but it's leaving the market open for Liberty.
It is. And really all we've seen the big boys so far. We haven't necessarily seen any of the big players. Just give you guys what we have this week: Diamondback, Transocean, Williams, Blackstone, Dominion, New Star, Bonanza Creek, Cheniere, Marathon, CVR, Pro Petro, Penn, Genesis. Pioneer we get this week. PSEG, Sempra, Centerpoint. They had a nice little M&A deal we ran, $2.4 billion divestitures. But so all it is to say, from what we've seen so far in earnings, higher oil prices are going to mean we're going to beat on earnings. We're going to see some surprises. We're probably going to continue to see valuations up. XOP, I don't have it up right now, but XOP I think is, let me pull it up. I know XOP's been up like 4 or 5%. What do you got, crude oil behind you, Scoot? What's the price of oil right now?
I knew you were going to ask. 64.20.
64.20. There you go, baby.
Yeah, there's a couple things going on there around the world to affect that, but
XOP is trading up 1.76 percentage points today. Let's go ahead and look at our chart for XOP. Over the past month, we're pretty much even. Let's go 3 months. Woo! We're up big, baby. We're up big. We're up about 20%. 20%. So, earnings will be good. Earnings will be good.
Yep.
And it's going to be busy, folks. Next week and the week following show, this earnings segment's going to be like, this was 5 minutes this time, but they're going to be like 20. Because it's going to be easier. Because we're going to have some companies that are going to suck, as we know. There will be some duds. All right. Hard Rock record mining prices, Stu. This was a story you ran. Oh, let me see the date. Today. No, yesterday. This is a weekend run. We're recording.
Yeah, it was Sunday.
We're recording this on a Monday.
Yep.
Probably listening to this Tuesday or at some point, week of May 3rd, 2021. Thank you for being here. So titles, records metal prices, catapult mining profits beyond big oil. I want you to walk people through what this means because I think there's a huge discussion around this that I think is super interesting. But walk people through some of the stuff going on in the mining business right now.
Well, there's a couple things. We love our buddy over there, Elon Musk. We're trying to get him on the show. That's going to happen. But when you take a look at green, you need precious minerals around the world in order to get all of these processes done and energy storage with the batteries and everything else. So that sets the tone for these record mining things going on. And major oil producers over the last several decades have always been the big profit center in natural resources. Now, that has changed. This is the first time that's ever happened. And I want to read a little bit on this chart. BP and BHP is mining big in Australia.
Well, they're only mining them. They used to be big. And then they used to be big in oil. They used to have a huge onshore field. And they just divested all of that. They're now just back all in mining.
Yeah, I helped do a lot of automation in those here in the Permian. So when you take a look at Rio,
those now? Who bought those? Who BHP sell to again? BP? That's what it was. It was BP. It was BPX. BPX.
And they bought good technology, by the way. That was some good oil field technology. Okay, we have Rio, Vale, BHP, Anglo, and I can't pronounce Fortescue. I don't know who that. I have to go look that one up. So those are the big boys in the drilling. In the mining. Then we have the big boys that we all know: Exxon, Chevron, Shell, BP, and Total. Total just put out yesterday that they had their best quarter since, I believe, 2014. 2014, Michael. So if the mining folks are beating some of the best performance that they've had since 2014, that's pretty darn cool. So that's the next part of this piece is the type of minerals that is actually kicking off.
Okay, one question though.
Yes.
What's driving why are they beating all of these oil companies? Is it demand? You might get into this. It's EV demand, I assume, correct?
Yes, it is the EV demand, batteries, storage, solar components, technology, and our buddies over there, that cause the Oh, the Suez Canal. What was the Evergreen? Ever Given.
Yep, Ever Given.
Yeah, the Ever Given displayed something and let the rest of the world know that there are five major choke points.
Yep.
And those five major choke points realize to the rest of the world that there are electronical shortages coming because of the precious minerals. And who holds most of the precious minerals that we're trying to fix? Give me a guess.
China.
Yeah, there you go.
Ding, ding,
There's
ding.
ding. Michael Tanner wins. Not only is he the great Kreskin of this generation, so you take a look at that, and then this article really comes out really well with inflation concerns. So you have a shortage of precious minerals coming in to drive up prices
Yep.
on electronical equipment, on solar, and everything else. And now they're also indicating in several other articles we're looking at running a special on, and that is there may not be enough precious minerals to be able to meet the Green New Deal. So you sit here and we go all these trillions of dollars, and there may not be the capacity to strip the earth of precious materials in order to meet the Green New Deal. So then you have returning cash going back in. Mining does not need nearly the cash reinvestment in these open mines that the oil folks do. So it is a much better investment right now is looking in precious minerals. So how's that so far, Michael?
No, it's good. You bring up a lot of good points. One, I'm looking at the graph that's on the article. Copper prices, whoo,
Yes.
$10,000 a ton. My goodness.
And
The
what is
mineral
copper?
demand, I think, is very interesting, and this is something
What is
that
copper used in?
oh, everything. I mean, fiber. This is a lot of stuff, right? I mean, you're the fiber expert.
Oh,
Isn't it all? It's in
it's
everything. I
every
think phones, everything. By the
air
way, I
conditioning.
saw
Yep.
CEO of Intel thinks the chip shortage, couple
Oh,
years on the
absolutely.
chip shortage. Ooh.
Yeah, I used to work for Intel as well too. So yeah,
Yeah.
that was a lot of fun.
Sorry, back on track here. Mineral demand is gonna be very interesting
Yes.
because with multiple states rolling out 2030 and even 2050, fully solar, wind, renewable resource, basically phasing out
And
fossil fuels.
and Michael, one more thing. The infrastructure required
Yeah,
for wind, solar, and everything else has to be updated.
yeah.
There was another article that we ran this weekend. 250 million acres just for wind farm will be required to meet these goals that they've put in. No matter that goes right back into the precious minerals. There is absolutely no way that we can meet the wind farm. And you take a look at the 250 million acres, we only use 4.5 now million acres.
Yeah, so it makes sense. It makes sense. Going back to the mineral demand stuff, you have to, as these states are transitioning, it's
Yep.
going to require more and more production of the actual. I mean, Stu mentioned the land requirements. Let's go before the land requirements. It's the mineral requirements. It's the raw materials to build a solar panel, to build a wind farm, to build a dam. I'm all for hydro though, but there's an infrastructure and whenever there's an infrastructure development, there's a raw materials cost.
You
Now,
bet.
this is something that hasn't been studied closely, and this is something Sandstone actually this summer we're going to be looking at more closely. Hopefully, have something to you guys in the summer. But what does the demand for minerals do as we transition both on a 2030 timescale, but also on a 2050 timescale? Because there's, as demand
Yep.
increases, the free market increases prices. The law of demand, that's what
Yeah.
happens. As demand, it's downsloping for a or it's up. It's downsloping for a reason. We see a shift in demand as prices go up. So I I'm very concerned that we're at a point where if we go all in on EVs in their current state, huge hard rock mineral inputs,
Yep.
we're going to find ourselves very dependent, one, not only on China, but on these minerals, which A, is controlled by China. Yes, they will always sell to us. They're never going to not sell to us because we're a buyer, or we will
Yep.
always be a buyer, regardless. But what's that going to do to the cost of energy? Will it make it cheaper than oil? Probably not. But there's also a case to be made. Oil's going to go to $115 here soon because everybody's going to be stopped producing, and demand for cheap energy is going to go up. Well, now imagine that, Stu. Mineral prices rise because the United States is forcing the production of EVs.
Right.
We lower oil companies decide to turn off the taps and stop drilling because there's no money in it. Well, now all of a sudden the demand equation for oil flips. There's a huge demand now for oil because, quote unquote, it's cheap. Well, what does that do? Prices rise. I saw an article the other day very plainly laid out. We could see $115 oil in 2023 once this cycle flips itself. And there's no drilling. We see this shift continue to come. I mean, it's interesting. Do I buy it? I don't know, but it's very interesting.
Yeah, I don't know. The whole dynamics are in, and then you throw in all the free cash flow. This is a heck of a mix to try to figure out this year.
I think this year we're going to see prices. I mean, you're looking at $64 oil. Yeah, I mean it's 64.21. Let's pull up some day trading charts here.
What is your feeling, Michael, for the price on oil?
I don't know what I'm having for breakfast tomorrow, Stu. I don't know what the price of oil is going tomorrow. Personally, I'm a bear, but
a bear? Why?
I think oil. We don't. Let's save that for another time, Stu. Let's save why I'm a. I mean, I'm naturally a perma bear.
For our regular listeners, we are in bear country because we've been scared out of our gourd by real bears. Yes. We are not bears on all markets. I just wanted to clarify that for folks that are new listeners.
If anybody of you watched the SEC GameStop, where they I am not a cat. I need to clarify that. I want to clarify a couple things that I am not. One, I am not a cat. It's just cracking me up. We'll do oil sentiment another time because it's a fascinating discussion. We're coming up on 20 minutes here, so I don't want to give too much time because we still have to cover, Stu, one, look ahead both for international and domestic. So internationally this week, what should folks be concerned about?
There is some more stuff on Iran coming around the corner, and even the last year on our podcast, we've always had a lot of fun, but it's really come to fruition now that a couple stories we ran last week on Iran, they could care less now. The U.S. is so unimportant to their cash flow. They have done all of this stuff in years, and they have now prepared for their cash flow technologies not to have to care whether or not the U.S. is impacting their sanctions. And I hate to admit it, but they've done well with that. Mm-hmm. Now, what that means is our foreign policy has fallen apart with the Iran nuclear deal. We are giving them everything. We're asking for nothing in return. And guess what? They don't care if they even sign anything. So we're going to see some more developments on that. I'm hearing some rumblings around that and OPEC. All of the numbers, Michael, we don't know how much Iran is actually pumping out to China.
We don't.
So the only way we can try to do that is get to the shipping logs, and they're lying about the shipping logs and changing everything. So trying to get a handle on that, and that is impacting supply on all that. So we're trying to run some more information on that. And Also, there's some new developments coming around the corner on the pipeline in Russia and Germany on the Nord Stream 2. I'm hearing some rumblings
What's
around.
going on in Russia right now? I heard it's getting spicy over there.
Oh, it is. And
A
they
little bit
are
of a rant
really
on me, of
getting
course.
nasty on their price because, we've talked about it for a long time on the show, and that is that their 30% to 35% GDP is energy export. And they are exporting nuclear reactors. They're exporting oil, gas out of the Arctic. So, you take a look at the pricing model. Russia is the bear in the corner and they're getting desperate. So that one's starting to kick in as well. We're having a whole entertainment in the international news desk.
No, it's been crazy. You're gonna have to keep us updated on all that stuff happens. I mean, what's your biggest thing this week? What should we be? Is you know
Iran,
is just Iran?
Iran and OPEC.
Okay.
It's got some stuff coming out.
What do you think? When's the next meetings?
They just had them, and
What they say? I didn't even pay attention. Yikes.
it was such a dud meeting that it's kind of like a you know
Because
the
it's like
last
every other month is when they're doing the production cuts, right?
that
It's
is
like
correct.
they meet every month, but every other month is when it's actually like,
And
ooh,
and Michael, I'm going to throw a prediction out right here is that on the board, get the amazing Kreskin right here. Saudi Arabia is done with laying over, rolling over. They're going to increase their production next month. So you're going to take a look at that. The $64 oil for WTI. I don't even know what Brent is this morning. It's 67. I
it's gonna
looked.
be higher. I've got it here.
Okay.
66, 62. It's down a 0.5%.
Yep. So if you take a look, that difference between WTI and Brent is usually about $3 more than it is right now. So what you're going to see is a really an increase in supply next month because they can afford to get some more money. They
Oh
need
yeah, yeah,
money.
they will,
Oh,
especially with prices this big. But what will that do to prices? See, that's where I think that's where the bear case comes in. If we want to get back up to 13 million, if they want to raise production by 4, 5, 6 million barrels over the course of the year, what's that going to do to prices? The only thing supporting them right now is OPEC.
but OPEC does not have control over its OPEC and OPEC plus members.
Yeah, I feel
They're
you.
selling what they need for cash flow. Cash flow is king right now in the world.
Yeah, it's true. Domestically, oil side, it's really earnings, guys. I think we're going to see big earnings. Next week's going to be busy, so I'm not even going to bore you with things that are going to happen today. Well, really, because next Monday, Stu, we're going to shoot this show. I need 20 minutes to cover earnings. I mean, I just read you the list. Let's look at this list again. Brutal.
What's even worse, Michael, is you got to review them and see what impact each one of those means to each company.
I
You're
know.
going to
So I'm just
be
going to cut me off now because I got a bad feeling about this week. A bad feeling about this week. But seriously, I think it's just going to be earnings, and then based on that, it'll be interesting. I don't think we're going to see much M&A action in the next couple of months. I think a lot of
no.
that's been done. The uncertainty, the frothiness of the market. I think everything crazy is internationally and politically in terms of how energy policy is going to be rolled out. So
Holy smokes.
you can say that again. Did we forget anything today,
Holy
Stu?
smokes. No, this is a good show today.
It's good
We
to be
are
back, baby. Good to be back.
Yeah, we got some great guests lined up, and we'll have them announce them here in the next week or so, and we'll have some fun. Get some extra expert opinions around here.
Yeah, because you don't just have to listen to me and Stu babble all day. We're also going to be implementing. You should check us out: Energy News Beat podcast, iTunes, Spotify, YouTube. Follow the show. I'm probably also going to be doing solo 5-10 minute rants on topics that irritate me. So those are going to be dropping infrequently. There's no rhyme or reason. It's just when something bugs me, when I see an article that grinds my gears. I will call it unhinged. Michael Unhinged, free from the chains of corporate censorship.
I like that.
Because yeah, I gotta get. Sometimes I get fired up, and you don't need that here on the main show. We look good. We wear polos on this show.
Oh,
They'll know
They,
we're going no video. It's audio only because I'm going to record them in my bed.
I don't need to know that. I really don't need. I just threw up.
All right, guys. Well, with that beautiful viewers or the beautiful image, I'm gonna let you get out here, get back to work, finish everything. Thank you guys for checking Energy News Beat podcast. We'll see you guys next week.